Good day, money masters and treasure hunters. Welcome to the July 1st marvelous Monday edition of today's Closing Bell on the Tom O'Brien Show. I'm your guest host, Steve Rhodes, filling in for Tom for the week while he is out recharging, or maybe Tom is making the B to a C of his next A to B equals CD up in life, just as our markets are making their B to a C. But in their case, it's an AB equals CD down. For those of you not familiar with me, I'm the morning anchor here at TFNN. Kick things off at 9 o'clock each morning for the first 2 hours of the trading day. I don't just tell you where price is. I tell you where price is going by using a set of trading tools that include leading indicators such as that lightning bolt, A to B equals CD pattern, Fibonacci expansion, retracements, also known as Gartley and butterfly patterns, swing point analysis, volume analysis, divergence. Oh, I love divergence between price and other indicators or oscillators out there. I've got a daily newsletter service as well, Mastering Probability. It's out each morning by 8 a.m., covers the futures, the Forex, commodities, stock markets with trade setups and a thorough review of different chart patterns that are out there. And for the first time ever, folks, we're offering my newsletter service to you for a 2-week free trial. Whether you've used the service in the past or not, that means 2 weeks, no charge to your credit card for an incredible education and a system for making money. All the details on the homepage of TFNN.com. I'm also author of a new special report at TFNN. The trend is your friend until it changes. That's available on the homepage at TFNN.com. You want to make sure that you download that report. Enough about me, though. This show is about you, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that each of us need in order to lead an inspired life. So let's go look at one of our tools. This is the tool I call Accelerate Your Learning Curve. You know, from birth up until about the time we're 18, our learning curve is dramatic, and our capacity to learn just simply staggering. We learned a tremendous amount very fast, and then things just simply seem to trail off. You know, it's like if there are no more exams to take, why read any more books? Well, just imagine what would happen if we kept up an accelerated curve just like in the early years for the rest of our life. Can you imagine what we could learn, the skills that you and I could develop, the capacities that we would have? Here's what I'm asking you to do. I want you to feed your mind just as you do your body. Feed it with great ideas out there. We've got them in the tiger's den all day long. Feed them from wherever it is that they can be found, whether it's Mastering Probability or the trend is your friend until it changes, or better yet, both. Good ideas, folks, they are simply found everywhere. So for the next 365 days, make it your mission to learn one thing each day, one thing, and then jot it down on a pad of paper, or maybe better yet, your digital memo pad. And then this time next year will be an incredible Independence Day celebration for you, but just do one thing. That's all you need, just one thing. Accelerate your learning curve. Let's go check out the learning curve here in the markets. We got the roller coaster of markets. We had the Dow finish up 65 points out at 14,974 out there. That's after getting up to a high of 15,083. S&P closed up about 9 points out at 1614. They had gotten as high as 1620, almost 1627 during the day. NASDAQ Composite up 0.9%, up 31 points, trading out at closed out at 34.34. They had gotten to 34.35. Russell 2000, that had a big move today, up 12 points, up 1.2%, trading out at 9.89. It's going after that May 22nd swing point high. We'll take a look at the IWM, the Russell 2000. We had the NDX 100 trade up 17 points out at 29.27, up 0.6% out there. We had the we got gold. Gold was, where did gold close at here? Gold up $28, trading at $12.52. Silver up 9 pennies. So silver kind of lagging a little bit. I wish I could say the same for light sweet crude. No lag there. That was up $1.44, trading out at $98. Our call-in number, 877-927-6648. Give us a call, and you can give us we can go take a look at your stock. But let's start off by taking a look at the New York Stock Exchange, the NYSE. Often overlooked, but I think probably one of the best indexes for us to be taking a look at. In fact, it's really a lead indicator as to markets that are turning. The New York Stock Exchange turned before the rest of the markets did. Today you had net advancing issues, 1,308 net advancing issues. That means the summation index is going to go ahead and tick up again here today. If you are watching us on Tiger TV, that's great. Maybe you're listening on the radio or your mobile device at tfnn.mobi. Remember, you can always get the live stream of the show by going to the homepage at tfnn.com, clicking on that button in the upper right-hand side, and you'll see this show streaming live. What we did here in the New York Stock Exchange was we did get a close inside the gap on June 20th. So with the summation index ticking up, even though we had a shooting star candle, which is a bearish reversal signal, what we also need to take a look at is the New York Stock Exchange did close inside the gap. The gap was created on June 20th. There was a gap down. The top of that, 91.57 from June 20th, closed out today at 91.67 out there. If we take a look at that, and so what does that mean? Where is the New York Stock Exchange going? It should at least get up to the top, meaning the bottom of the June 19th. This is a downdraft that we're taking a look at. So if we take a look at June 19th, that low, 92.55, that is a target area. If we take a look at the retracement level from the swing point of May 22nd's high down to last Monday's June 24th low, 93.59 is absolutely not out of the question, and that is on the New York Stock Exchange. Let's go over and take a look at the S&P 500. Let's go see what it did. It also created a shooting star candle today. Again, another reversal. Now, what the S&P 500 did for the first time was it went up and it tested the gap from June 20th. That level was 1624.62. Today you get up to 1626.61. You reject that on volume, so we got a rejection of a gap on volume and price out there. You know, you like to see resistance areas tested more than once. Today was the first test out there. We got a lot of fireworks going off this whole week out here. Certainly that does not mean that we're not going to have fireworks in these markets. At the bottom of the gap, or I should say the low of the June 19th candle session, 1628.91, did not get up there to test that. We will get up there. The S&P 500 should get up there to test that level. If we go from the swing point high on May 22nd all the way down to last Monday's session out there, you can see that the 0.618 level, 1638.72, I suspect that that is where the S&P 500 wants to get to. Why? Well, one of the reasons is that when you break a trend line, which is exactly what the S&P 500 did, it broke it convincingly with volume, wide price spread, the whole kit and caboodle, did that on June 20th. And when you break a trend line, this is now a trend line going back into the November 16th lows out there. And when you break a trend line, what often happens is price tries to get back inside that area. That says that it goes up and it tests that. Maybe it doesn't test it tomorrow. Maybe it's Wednesday as we have that shortened trading session. Could even be Friday. But it looks like it wants to test that area. And the New York Stock Exchange really giving us a signal, because we had a good breadth of stocks as far as net advancing issues, 1,308, so that's not too shabby out there. And so on the S&P 500, your number is about the 1638-ish type level. If we go take a look at the SPYs, go see how that translates over to the SPY. We had the SPY close out today at 161.36. We're going to see that that tested the gap as well. First test of the gap, meaning the June 20th high, 162.10. That had 321 million shares there. Today, what did we do? We did a total of 128 million shares. Now, 128 versus Friday's downdraft day, not downdraft, but Friday pulled back. That was with 160. And if we take a look at even Thursday's session, I should say, 129 million. So you're coming into that gap on light volume. If we take a look at the same set of swing points, which would be May 22nd, down to the low of Monday, June 24th, which was 153.73 out there, we'll see that we're above the 0.382 retracement. That says 163.97, sweet old 618. That is in the cards. And if you take a look at the low of June 19th, that number 163.38. So somewhere around 163.38 to 163.97, unless volume is for some reason picks up and would pick up tomorrow. Certainly not going to pick up on Wednesday. But right now what we've got is the markets are doing nothing more than building the C point of an A to B equals CD down. If, in fact, we get up into that 163.97, that 0.618 level, what we will be taking a look at is an A to B equals CD down that will go ahead and take price into the 150.62, or I suspect 147.17-ish will be our first target out there. If we take a look at the, let's go take a look at the diamonds here before we go to our first breakout here. Go see what the diamonds did. Oh, I guess I have to shoot. I got to hit the right button out here. Looks like we're going to have to do the diamonds when we get back from our first break. Folks, while we're on that first break, go to the homepage of TFNN.com. Download my free special report. the trend is your friend until it changes. Take advantage of that special offer. No charge to your credit card and an education that you just simply can't pass up. 877-927-6648. We'll be right back, folks.